the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Hello, this is Hall Martin with Investor Connect. Today we're here with Michael Mealing and Stephen Jorgenson of Starbridge Venture Capital. Stephen, Michael, thank you for joining us.
Thank you.
Thank you.
So can you tell us about your background before investing in early stage companies? What did each of you do before this round?
I guess I can start off. This is Stephen Jorgenson. So I've been a professional fund manager for going on about the last 14, 15 years, I would say, maybe a little bit longer, thinking back to my time in Florida. So I got into the sector actually from being an angel investor for about the last 7 or 8 years into the aerospace market. At the time, I was a hedge fund manager for Woodridge Capital, and before that, Viridian Fund, based out of Florida. My original background in finance came from straight out of college. I got a job on the board of trade in Chicago at a trading firm down there. I got to work on the options exchange in Chicago as well. Did a lot of work back office with portfolio management, a little bit of quantitative analysis and trading, and kind of got a flavor for a lot of different parts of the active trader market. And over the course of the career of the last 15 years, I kind of focused in on technology stocks, publicly traded stocks with options and derivatives and all kinds of fun fixed in contracts. So I got kind of the full panoply of complicated financial mechanisms and got to see kind of the back workings of a lot of how finance works. But yeah, I had a pretty good, successful career as a fund manager for over a decade. I was able to parlay that into some individual angel investments on my own and learned that I really find the aerospace and especially the space sector full of opportunity for the next decade and beyond. There's a lot of interesting technologies out there, and the space sector uniquely seems to be positioned to touch across so many other sectors of the market, from microchips to manufacturing to biotech, material science. Space kind of touches on all of that because it's such a difficult market, such a difficult problem to solve for a lot of the things that have to happen there, that you end up with a lot of really good innovation, things that you couldn't or wouldn't have done had you just been looking at the terrestrial market. But a lot of the products are very beneficial, very valuable to the terrestrial market. So we can get into that later in the call, but there's a lot of good things happening there over the next decade that I think the investors would be very interested in hearing about.
Great. And Michael, your background?
Sure. So I was highly involved in a lot of the early internet back in the late 80s, 90s, tried to bail out on the IT sector in the early 2000s after the bubble burst, but it kept drawing me back in. I've done a couple of startups in that sector, but in 2004, I got sucked into a space company with some friends out in Santa Clara, built a vertical takeoff, vertical landing, suborbital spacecraft company that is now one of the commercial lunar payload services companies working with NASA on returning to the moon. And since then, I've been in and out of technology companies of various types, whether it's telecom consulting or creating a space ground station network. About 4 years ago, I joined a venture fund here in Atlanta that had been around since 2002, had about 8 funds simultaneously running with over 320 LPs. So I got a little bit of a trial by fire. It was myself and the CFO who basically ran everything related to the fund. And that's where I really got an understanding of what it takes to run a fund, what it takes to make decisions about what to invest in, but also LP relations and the very real problem of venture funds having companies in their portfolio that have at least their driver's license and maybe actually going to college. And so the problem with companies not exiting, saw a lot of problems with that, and decided that I wanted to marry venture capital and my space background, and met up with Stephen. And that's when we decided to form Starbridge. So now I get to apply both the venture experience as well as the space experience.
Well, that sounds great. So, Stephen, what excites you right now?
There are so many things happening in the sector. It's actually hard to keep up on a daily basis. The lowering of launch costs has opened up so many new opportunities for businesses and technologies to come of age, basically. The biggest barrier has been launch costs for many, many years here. That is what kept a lot of the business cases from closing on some of the technologies that we've been looking for. And we spend a lot of time at Starbridge kind of game planning out what technologies are going to be necessary to get from this level to the next level of opportunity. And launch costs were by far the biggest roadblock to that. What you're going to be seeing in the next immediate future, next couple of years here, is a lot of shakeup in communications. So with the broadband constellations that are going up, you're going to see a lot of disruption in the existing terrestrial communications market. If people, especially in that industry, are not prepared for what's coming down the line, they're going to be caught flat-footed on that one. So that is going to be pretty exciting to see. Lots of opportunity. Then again, of course, if you're in the wrong place, lots of risk. So better to get a handle on what's coming down the line sooner rather than later for anybody in communications. There's quite a bit happening in the Earth observation side of the space arena. That's kind of a small part of the overall pie right now, but probably growing as fast as anything out there, with the exception of the broadband in the next year or two. We're seeing a lot better and a lot more capability coming into that market. So we began that sector with optical observation, think, pictures from space. And in about 2015, 2016, the market opened up for radar imagery from the commercial sector to be sold into that market. Now we're at the point where you're getting advanced sensors like hyperspectral imagery, which adds kind of a whole new dimension to what kind of data you can figure out when you're looking back at the Earth and what industries it's useful for. What's going to be very interesting over the next few years here is data analytics companies and what their customers can do with the output as you combine all those different sets of imagery, add a little artificial intelligence on top of it to get you better analysis and data mining of just massive reams of information coming from the satellites. That opens up a lot of opportunity, and it looks like a software company when you look at that side of things. Beyond that, now we're talking mid-2020s at this point. You're going to start seeing a lot of in-space manufacturing popping up. So think high-value products made in space and imported back down to Earth. So these are things that utilize the vacuum and the microgravity of space in the manufacturing process to create products you simply cannot create on Earth. So one of the best examples that they've shown so far is something called Z-bland optical fiber. It's a form of fiber optics, just like you see running across undersea cables or in fiber optic cabling at the local level for communications, but it is a tremendously higher quality cable. Not to get too far into technical details, but it basically allows the light that travels down the fiber to not get dissipated nearly as fast or as much as a traditional optical fiber, meaning you don't have to have as many repeaters in the line. You have a stronger signal. You can put more bandwidth in a single optical fiber. Lots and lots of applications in high-end communication. Beyond that, you'll see things in biomedical. That's a sector that we're hunting for the next big product in right now. But that's still, like I said, probably going to be in the mid 2020s before you start seeing real product coming down there. Beyond that, we get a little bit more speculative, but yeah, towards the end of this coming decade, you're going to be seeing things that right now would be considered science fiction.
Well, that's fascinating. Michael, what do you find exciting these days?
Sorry, to reiterate something that Stephen said, is the fact that launch costs are dropping. And there is the chance with both SpaceX and Blue Origin that those launch costs will begin to drop even more, to the point where there is some speculation that we could see another 2 orders of magnitude drop in launch costs. And there's an old Clayton Christensen quote that anytime you drop the cost of something by an order of magnitude, you create more than that in terms of new industries and new business models. And the industry and the economy in general doesn't quite know what to do with that capability. And so within Starbridge, we do a lot of thinking about what happens if within the next 3, maybe 4 years, you end up with access to space becoming something that's in the few $100s per kilogram as a 1,000. And what does that mean? And I don't think the rest of the economy and even the space sector itself is prepared for that. And that's kind of exciting because of the unknowns associated with that, in terms of what can you do and what are the justifications for that. And it's a very, very interesting experiment we're running.
Well, that's great. So what's your advice for people that are investing in startups in the space technology sector? What do you advise them to look for before they write that first check?
I guess I could offer a little bit perspective there, since I started out as an individual investor into the sector myself and had to learn kind of the hard way along the way, really, how to invest in it. First and foremost, you really need to know the industry, at least to some extent, before you put any money into it. We see a lot of investors coming in and following hype. So there's companies, the sector is no different than any other. There's companies out there that are much better at media and hype than they are at actually running a profitable business and making it a good investment. So talk to people who understand the sector, whether that's Starbridge or somebody else or whoever you have as a source. Make sure that you know what you're investing in beyond just looking at what the company presents as their financial sheet and their pitch deck and all that. There's a lot more to this sector than what you can see at the surface of a pitch meeting. So a lot of, and I can get into a little bit what Starbridge does to make sure we have a better picture of what the investment actually is that we're looking at. First of all, we do have quite an extensive network within the industry. And so when a company comes to us, generally speaking, we've heard of them before. We generally know at least a few members of their management team from other experiences, or at the very least, we know who to call to find out more about them. That's a huge, huge benefit. Being able to then look through their deck and test some of the claims they make. So a lot of the decks we see make some pretty bold claims about what their addressable market or their customers are that they've been talking to. So at Starbridge, we tend to know who those customers are and how to contact them. So when they mention that they have a customer that they're looking to close a big deal with, well, we call up that customer and talk to somebody we know there and find out, is this real or are you just kind of humoring them, so to speak? But yeah, that is something that is going to be very, very hard for the individual investor to do. But there are still opportunities. Even if you can't do that, you just have to be careful. So I know a lot of investors recently have gotten into SpaceX shares. Now, SpaceX is probably on their round K or round J issuance at this point. Probably a good investment, even at this point with them. but that would be a very rare exception, I would say. A lot of the companies that we see tend to come off more as engineering projects rather than businesses. And so you have to be very, very careful to make sure what you're looking at is a viable, high growth business and not just a company that a group of engineers put together to basically create a lifestyle for themselves because they love the technology and they want to pursue it.
So what's your advice for people running startups in this sector? I'm sure there's many challenges in running a space technology application, and there's probably unique challenges for the startup. What would you advise a startup to think about before they join in on this new frontier?
Well, having done that myself back in 2004, which was way too early, timing does matter, as it does with pretty much any startup. But the number one thing that we tell startups that pitch us, and I tell my friends before they decide to go start a company on their own, is to understand the competitive landscape that they want to work in, to understand and spend time understanding the customer's problem. One of the problems we have in the space sector is a lot of technologies are very shiny, and engineers like to spend more time with the technology than they do with the actual customers and solving problems that generate revenue. And the final one is that things change quickly enough that if you are a one product company, you are running a great risk of the entire sector passing you by in the blink of an eye. We see that a lot with the 130 some odd small sat launch companies around the world, which is already an incredibly overpopulated subsector within the industry. And if SpaceX is even able to hit half of its targets, there's no way that those companies are going to be able to compete in that market with that significant of a player reducing launch costs. And so we strongly encourage young entrepreneurs to not focus so much on the technology, but on the problem they are solving and understanding whether or not it's very easy for someone to come in with a lot more money to disrupt that entire area. We see a lot of companies attempting to be disruptive, but they're doing it on the cheap. And all it takes is some other player with just a little bit more money to put their existing business at risk. And so understanding that competitive landscape and understanding not to focus on the technology, but the much more broader problem space.
So let's talk about Starbridge Venture Capital, the fund itself. What exactly is your investment thesis for this sector? What are you focused on?
So we are not a seed stage company. We're focused on space technology companies that have multiple revenue streams, and especially either a significant space-based one or a dual space and terrestrial applications. We tend not to invest at the seed stage, very, very early stage, because the infrastructure for supporting small companies at that level already exists in the form of SBIRs, incubators, and angel investors. We come in once a significant portion of the technology risk has been retired. But the number one thing we look for is an understanding of the market and proof that the market exists. In the IT world, we call it product market fit. And in the space sector, we struggle to find that sometimes. There's a lot of build it and they will come, and there's no market for the product to fit with. So we spend a lot of time verifying that, yes, you may have letters of intent, you may have one contract, but what is the market, the total addressable market look like, and what proof exists for that? And so we're very much focused on LP returns as opposed to how sexy a particular business or the sector may be. We love the business we're in, but the business we're in is about generating returns. So the companies that we look at have to be very strong, the markets have to exist, and the opportunity has to be large.
There are so many aspects of what we do as managers of this fund to try to kind of both differentiate ourselves from others that are investing into the sector, but then also to kind of set a higher standard for return for our investors. I've spent my entire career basically providing the best possible returns I can for clients, which usually includes myself in every fund that I've been invested in. And so we put in a lot of diligence into the investments that we make to make sure that they satisfy all of our criteria, including timing. And I can't stress enough how important timing is to the investments we make, both in when we enter an investment into the company. Usually it's at a point where they are going to have the start of a good runway of customer demand and sales. Like Michael said, not going to investing early enough that we have a unknown technology runway timing to deal with. And maybe this is a little bit of my history as an stock options trader coming in. Timing is everything in that one. So when we come into a company as an investor, usually they are starting a very steep ramp up growth cycle. And so our investments usually have very high returns right away in the beginning, kind of entry at the sweet spot of the investor return cycle. And that's no accident that's what we target for the fund, kind of the late seed in some cases, but mostly the A and sometimes B and C round, but targeting right around the A round for most companies seems to be the best financial return for our investors on the companies that kind of pass muster for us.
Is there a particular startup that fits that thesis you can call out?
Let's see. I guess one of our first investments very first investment out of the fund would qualify for that. So Umber Lab, we came in, they put in a good amount of money themselves, the founders did, to get the operations and the technical risk mostly retired. And when they opened up to outside investors, we were right there waiting and put an investment in there. They subsequently did another round about a year later that we participated in again for a multiple of the first round's valuation, which was nice. And this coming year, they'll be launching I would say, very technically superior satellite radar, synthetic aperture radar antenna satellite system, providing a whole new level of cost savings and imagery into the Earth observation market.
Great. So let's talk about the challenges in the space for the startup just briefly. There's, of course, regulatory challenges and market and technology challenges. And I can imagine this sector has all three in tremendous amounts. But if you had to pick one sector, what would you describe as really the critical one a startup has to get right in order to make it work?
I think that given the companies that we see, I do a lot of pitch competitions, things like that, a lot of smaller companies just starting out. And there really are two. The first is there's not a lot of information available out there for an entrepreneur to really understand the competitive landscape that they're working in. And there is a lot of hype. There's a lot of inaccurate information about what demand looks like. Some of that's coming from the government and some of that is coming from industry cheerleaders, which we love, but we would rather them be much more realistic. But I think the other one is being undercapitalized. When I started the space company back in 2004, we were a bunch of bright-eyed IT guys thinking that we could build a rocket for what it would cost to build a website, and we really didn't know what we didn't know.
That sounds good. So If you had to pick, you mentioned many applications and sectors out there that you follow. If you had to pick one or two that you think are good immediate opportunities, as you said, timing is important. Which one or two would you put as a good opportunity for this time frame?
I think the major one, the two are the ones that have been around since the 1960s, communications and Earth observation. We really do understand the markets, the needs, the business models. But that does mean that a company can come in with a new technology and actually solve a real problem that people have right now. A perfect example is laser-based communications, which solves both a throughput problem as well as a security problem. For example, BridgeSat, which is one of our portfolio companies, provides secure communications because it is incredibly difficult to eavesdrop on or to spoof communications with a spacecraft. Because the laser is so accurately pointed, nothing can get in between it and the ground station. So that's an example of communications. In Earth observation, we now have new sensors and new processing technologies that can take that raw data and turn it into actual actionable intelligence. Before, that capability was really only available to governments. But now it's being developed in a way that an average farmer on a regular sized family farm can get access to satellite data that allows them to get down to very precise levels of nutrients, water, and pesticides on a crop that saves them a tremendous amount of money.
Yeah, I'd agree that communications is probably your biggest near-term opportunity there. Another company that is in our portfolio is a company called Link, which plugs right into the existing cell phone networks. It's a constellation of satellites that basically allows, their patented technology allows for your unmodified cell phone, the one you've got in your pocket or in your hand right now, to talk directly to the satellite for small data packages. So think text messages, or if you want to get into another big opportunity, the whole Internet of Things. Those are the type of signals that can go from Earth to their satellites with no additional hardware, just using existing cellular network systems. So that's a good example of a company that avoided the regulatory problems by working directly with the existing providers, the existing cell phone companies worldwide. So rather than trying to get bandwidth and regulation and going through all the hoops, they basically just can come in under the umbrella of the bigger corporations who already did that and just be a business-to-business partner with them. But it's those kinds of technologies, kind of a little bit, I would say on the fringe, but things that you just don't see until they're already integrated into the system. Those are the ones that we look for and find by far the most profitable for investors.
Very good. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
I think that one of the things that I would go back and just reiterate is, as with any other emerging technology sector, whether it was nanotech a decade ago or the internet, 2.5 decades ago, there's a lot of hype and there's a lot of media attention. And I would stress to investors looking at the sector to not follow the media attention. There's a great set of analysis on the space sector from a company called Bryce that estimates the current size of the space sector at $366 billion. But the launch component of that is only about $6 billion. That $6 billion business around launch does enable the rest of that business, but the launch business itself is not where you're going to realize a lot of the gains in the sector. It's in things like broadband and communications and Earth observation and analysis and other things that the launch business enables. And so I would encourage investors looking at the sector to not pay attention to what actually gets the headlines, but dig into the actual applications that those headlines enable And that's where you're going to find the businesses that actually generate large amounts of returns.
Well, very good. So how best for listeners to get back in touch with you?
Well, they can go to our website at starbridgevc.com, or they can find us on LinkedIn as well, and Starbridge Venture Capital. And easiest way is to ping us on our website and to let us know if they're interested, and we have additional information that we can send them from there. So again, that's starbridgevc.com.
Great. We'll add that to the show notes. I want to thank you both for joining today and hope to have you back for a follow-up soon.
Absolutely.
Great. Thank you very much.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.